Hello there and welcome to IMTV, the Industrial Minerals News programme. Coming up today, Halliburton opens the world's largest frac sand terminal, Lynas restricts production of rare earths, and Quartzwerke completes its acquisition of kaolin AD. First today, oilfield services provider Halliburton has opened the world's largest dedicated frac sand transfer terminal in Colorado. The terminal can store up to 40 million pounds of frac sand and will ship most of it to the Denver-Julesberg basin within the Niobrara shale play. The plant can discharge 2 rail cars at the same time at a rate of 650 tonnes per hour, which is almost double that of what most other facilities operate at.
While this is a big step forward for Halliburton in an industry where logistics is an important issue, prices for frac sand are very low per tonne in comparison to other minerals, and therefore expensive shipping, transloading or storage can have a significant impact on profits. Logistics is often overlooked in other markets, but for the growing oilfields industry, it's possibly one of the first things companies consider. We at Industrial Minerals have seen examples of companies buying up stretches of railway in order to reduce traffic, while others are going down the same road as Halliburton, looking to open their own frac sand distribution terminals. We expect to see more of this in the coming months.
For an in-depth analysis of frac sand logistics, join us at Oilfield Minerals Outlook 2013, taking place at the Hilton Post Oak Hotel in Houston from the 19th to the 21st of June. You can register online at www.indmin.com by clicking on the banner on the right. Next, the CEO of Galaxy Lithium, Iggy Tan, has resigned. The company's been under pressure after an explosion at its plant in Jiangsu in China caused investors to withdraw $66 million. The incident, which happened in November, killed 2 workers and seriously injured several others. High operating costs at Galaxy's Mount Catlin spodumene mine in Australia have led the company to mothball operations, purchasing the feedstock for its plant from Chinese producer Talison Lithium instead. Last month, Galaxy turned to its shareholders for help in covering its costs, asking for $47 million in capital in exchange for shares at a significantly reduced rate.
The resignation is surprising because Iggy Tan has always been seen as the driving force behind Galaxy. This is a company which smashed all other targets to come online when it did and had its plant up and running ahead of schedule. Unfortunately, the explosion last year, which was not identified as a risk by the plant designer because of the highly abnormal nature of the incident, led to Chinese investors withdrawing funds. Then, on the other hand, you have the shutting of the Mount Catlin mine, which is not connected, but it shows just how keen the company is to shave costs. It hasn't been a good 6 months for the company, and maybe the resignation led on from this. In terms of how this will affect the wider lithium industry, it's hard to say whether it will, as this is one company producing 17,000 tonnes a year of lithium carbonate, and so far there's no indication that that will change.
Australian rare earths producer Lynas has decided to delay ramping up to full production at its LAMP Advanced Materials plant. The facility is currently operating at a rate of 11,000 tonnes per annum and was due to ramp up to 22,000. The company now says this will be delayed indefinitely. LAMP produced its first batch of rare earth products in February this year after lengthy legal battles with the local populace. Analysts believe the biggest concern for Lynas would continue to be rare earth prices. The company has since said it intends to wait for market demand and rare earth prices to improve before moving up to phase 2 of production. And finally, German industrial minerals producer Quartzwerke has completed its acquisition of kaolin AD. Quartzwerke, which controls European producer AKW's operations, acquired 87% of the shares of kaolin AD for $2.77 per share. 67% of these shares were sold as part of a purchase agreement signed at the end of last year. The acquisition will increase Quartzwerke's sales to €420 million on a consolidated basis and bring its total number of employees to 3,500. Bulgaria's competition authority cleared the share purchase agreement in February this year. However, the deal has only now been officially cleared on all levels. Industrial minerals consultant Ian Wilson says this was a strong follow-on from the acquisition of Goonvian by Imerys late last year and a natural move forward for both companies. Wilson noted that the acquisition of Kaolin AD by Quartzwerke was a logical step as they're in the same general markets, and that this is a further consolidation within the kaolin sector in Europe as well as the silica sand sector. AKW already have large kaolin operations in Hirschau in Germany and also now in Poland and Ukraine. Well, that's all we have time for this week. If you have any comments or feedback, we'd love to hear from you. You can get in touch via Twitter @Indmin or contact us through our website www.indmin.com, where you can also find more information on all of these stories. Thanks for watching and see you again soon.